Folks, this week is going to be critical for investors. I want you to be prepared. Listen up. Don't click nothing. Don't smash nothing. Don't buy nothing. Just listen. Listen to me. Last week was proof, evidence, and a very important lesson for a lot of new investors about how the market works. We have seen the market take a nosedive, and the peak was that August 5th Monday bloodbath. The whole narrative coming up into the last week was negative. People were talking about recession fears, Iran starting World War III. We were talking about unemployment numbers being bad. The SAM rule has been triggered. It's never been wrong before. And we just came off the best week of the S&P 500 of 2024 just happened. S&P 500 is up 4%. NASDAQ ran 5.3%. Small caps IWM is up 3%. Massive week. In fact, since the August 5th bloodbath, the S&P 500 is up 7%. 7%. That's almost the annual return in a couple of weeks. And the whole narrative is all of a sudden completely shifted 180 degrees. Claudia Sam comes out. She says, look, this might be the year where it's not going to be accurate because there's a lot of skewed data. She cast some doubt. And all of a sudden we have claims come out. Jobs are not as bad as people thought. Iran still hasn't struck Israel, so World War III is on hold. We have retail sales doubled than expected. Japan carry trade completely unwound and basically faded like a fart in the wind. So the whole setup is all of a sudden changed. And all these so-called experts are now on TV telling you how great things are. The same people who were screaming at you to run like a headless chicken towards the hills and we're all gonna die. The same people are now on mainstream media telling you how great things are in a span of a week. What have we learned here? We have learned an important lesson, folks. A lesson I've been teaching to my community for the past 4 years since I've started this channel. And the lesson is, it's not gonna work. It's never gonna work. And timing the market is a stupid game. And when you play stupid games, you win stupid prizes. And when you do this sort of stuff, what happens? Well, you miss out on a huge amount of upside. I've showed you this before. If you miss the top 10 days of the year, your returns are going to be heavily diminished. In fact, there's a study that shows that missing the top 10 days in a 20-year period, basically 10 days in 20 years, your returns are going to be slashed by half, Eddie. Now, the past week probably had a couple of candidates to be one of those top 10 days, but nobody saw it coming. Everybody thought the setup is negative. And all of a sudden, everybody's a genius. And now everybody thinks, oh, the setup is great. You can't time the market. It's impossible. You might hit it once or twice. You might hit it 40% of the time, but that's gambling. It's impossible. Look, NVIDIA this week, the past week, is up 19%. 19%. Tesla is up 8%. Palantir is up 6%. Citadel all of a sudden is buying up Palantir. Everybody's excited about Palantir again. It's not going to work if you're going to try to jump in and jump out of this market. And the last week is such a good proof. It's such a good lesson. If you lost some upside, if you lost some potential last week, it's good because it's a lesson for you not to try this shit again, not to try and time the market. Sometimes you think, oh my God, all the indicators are pointing to a horrible week. Everything is bad. There's no way this market can run off of this. It's impossible. And yet, this just happened. So since August 5th, to now, you have had 2 weeks of the most important lesson an investor can have, and you got off cheap. This is just a preview. So listen up. Look at my own portfolio. I practice what I preach. My portfolio consists of 2 stocks and the S&P 500. That's it. The S&P 500, Tesla, and Palantir. 40% S&P 500, 40% Palantir, 20% Tesla. That has always been my portfolio, and I've never changed. Now, this year, I'm up 41%. Year to date. It's a lot better than the 17% that the index gave. And it's not as good as Palantir with 93%, but it's a lot better than Tesla with negative 13%. So I'm up huge on Palantir. I'm up a little on the S&P 500 and I'm down on Tesla. But because I mix it up, I'm up 41% year to date and I'm happy with it. Now, the big question is what's next? Because after such a huge, crazy week, there might be a correction. There might be. I'm not saying it's guaranteed. I'm not promising. I'm not predicting. I don't know what's going to happen. But after such a strong week, you might see some correction. So what do you do? Well, let me show you how I'm handling this. Look at my own strategy and you can figure out your own. Now, right now, what I've done is I'm looking at Palantir, I'm looking at Tesla. I'm saying, okay, is there any reason for me to cut ties with any of these companies? Is there any reason that I would like to reduce my exposure to Tesla or Palantir fundamentally? Anything in the business that makes me less certain, less convinced that these companies are the future? And I say to myself, no, fundamentally, these companies are doing a lot better than last year business-wise. And their potential is, in fact, bigger than it was a year ago. So I don't want to sell any of them. So the fact that Tesla is down and Palantir is up is irrelevant. It's completely irrelevant. The only part where it actually matters is how much do I buy? Because I buy at all times. I dollar cost average, which means I keep buying at all times. Palantir, Tesla, and the index S&P 500. Now, because Tesla is below 20% off of the 52-week high, so it's below $224, I'm going to buy a little bit more of Tesla compared to Palantir and compared to the S&P 500. Because the S&P 500 is high, Palantir is high, they're both not in that range where I want to double down, but Tesla is within that range. Tesla is 20% below the 52-week high and actually lower. So I'm doubling down on Tesla and I'm dollar cost averaging normally into Palantir and the S&P 500. That's always been my strategy. Nothing has changed. Now, a lot of people are saying, well, Tom, what happens if the market crashes this week? What do you do? What happens if the market rallies this week? What do you do? Well, it's very, very simple. Because at the end of the day, here's the hard truth that people in mainstream media don't want you to know. We have 50% chance that the year is going to end up 6,000 on the S&P 500. There's also a 50% chance that the year is going to end at 5,000 on the S&P 500. So it's an equal chance that we move up 500 points and we move down 500 points. And what they don't want to tell you, and because they feel embarrassed, because they want to produce this shows where they're like the experts that know everything is going to happen, they can predict the future. They don't want to admit the fact that they have no idea. Now, I have no problem saying it. I have no idea whether we go up or down 500 points on the S&P 500 by the end of the year. I have no idea. I have no idea what's going to happen this week. I have absolutely no freaking idea. But I have a game plan. And my game plan is very simple. If a correction happens the upcoming week that starts today, well, that's great. I'm going to see if any of my stocks remain 20% below the 52-week high. If that's the case, I'm going to double down on my dollar cost averaging. I'm going to buy more than usual. If the market rallies, continues to go up, well, I change nothing. I continue to buy slowly. That's it. Simple as that. I don't FOMO when the market runs up, and I don't panic sell when the market drops. The same thing that happened with Palantir. Look at Palantir as a prime example of that strategy and how it worked for my community. Now, in our community, I can't tell you for certain because I don't have access to every single member's portfolio. But in general, in my community, the consensus was we're not selling the Monday pandemonium bloodbath, right? So Palantir drops from 27 to 24, almost overnight, August 5th. And in my community, we said, look, we're going to ride it out. We're going to ride it out. In fact, we might double down. And a lot of members doubled down. A lot of members just stayed. But virtually, I don't think anybody sold. Well, I have no idea. But the consensus was we're not selling. I had one member who put in 6 figures into Palantir almost overnight when this crash happened. But that's not a prudent thing to do. And if he's watching this video, you shouldn't have done that. But hey, the idea is very simple. If you have this setup where you're convinced of a company's fundamentals and business, and the company all of a sudden drops more than 10% in a single day overnight, what do? Well, you say, I'm going to dollar cost average into it. That's an opportunity to reduce my cost basis. So then you wake up and then you go 2 weeks forward into the future. The stock goes up from $24 to $32. That's a 33% increase in 2 weeks. Now, could we have known that's going to happen? Did we know? Could we have predicted it? No, we don't know. Because the same sentiment, I can tell you that this stock can be $12 tomorrow. It might drop $20. Who knows? Nobody knows. But if you just dollar cost average and you understand, if the stock goes up, you slow down. If the stock goes down, you basically increase the pace. And long term, if you've picked good companies, if you've picked good businesses, solid businesses, long term, time is your friend. Time is the best friend of a great business and the stock market, because always, fundamentals are going to beat short-term price action psychology every time. And the past week is a good proof of how timing the market is not a smart strategy. A lot of people are talking about it. Oh my God, I've made $100,000 this week. I've made $200,000 this week. But sometimes they lose those 100 and 200, and there's no consistent way of predicting how the market is going to behave. There's a very famous saying, the market can stay irrational much longer than you can stay solvent. And that's not just a saying, it's very, very true. So the best thing to do for a long-term investor, not for a trader, for a long-term investor is A, understand I'm a long-term investor, I'm not a trader. And understand that you don't want to be trading as an investor. And number two, time in the market is better than timing the market. Dollar cost average slowly, keep the pace. It's that simple. I promise you it's not complicated. It's that simple. I'll see you next one. Have fun.